Part 1: The setup, AI cycle, why apps matter, and the Duolingo question. Over the last 3 years, Duolingo evolved from a clever gamified app into one of the most talked about AI consumer software stories. Revenue climbed, profitability scaled, and the user base exploded, then sentiment snapped after a huge run. The stock retraced sharply in a single quarter and now trades at roughly half its recent peak. So here's our driving question. Is Duolingo at a steep discount a smart buy or a value trap with great marketing? To answer that, we need context. The first act of the current AI cycle was all about infrastructure, GPUs, networking, and data centers, rails first, trains later. As those rails get laid, attention shifts up the stack to applications, software that normal people use every day. High-quality AI apps earn premium attention because they combine 3 compounding forces: personalization at scale, falling marginal content costs, and rapid iteration. Together, those forces accelerate user growth, deepen retention, and create operating leverage. According to industry data, the global edtech market is expected to grow from $163.5 billion in 2024 to $348.40 billion by 2030, with a compound annual growth rate of 13.4%. The 3 core arenas are language learning, K-12 support, and professional skill training. AI is breaking the old constraints of standardized, costly, low-efficiency instruction and opening the door to exceptional returns for leaders. What you get in this video: a precise, no-hype assessment of what Duolingo really sells and how it monetizes to the user and financial flywheel. 3. The moat and real risks for valuation and why the stock halved. And 5. What to watch next so you can make your own call. This is not investment advice. Treat it as structured thinking for your decision-making. Part 2: What Duolingo actually is, product, model, and expansion beyond languages. Duolingo began with a simple promise: make language learning feel like a game. Today, it's an AI-powered learning ecosystem built on a freemium model with subscription conversion and high-frequency habit loops. With over 500 million global users and 130 million monthly active users, it's one of the largest edtech products in the world. How it makes money: the funnel is straightforward. A massive free user base flows into premium subscriptions that bundle extra features, lower friction, and more personalized feedback. On top of that, there are adjacencies like testing and ads, layered on the same design language of short sessions, streaks, and rewards. Why it works: that 3 product truths drive stickiness. First, breadth. 40+ languages means almost everyone finds a relevant path, from Spanish and English to Welsh and Navajo. Second, respect for time. Lessons are designed for 10-minute windows that fit into fragment learning. Third, AI-first features. Speaking drills, role-play, contextual listening, and real-time corrections make practice feel productive and alive. The psychology is intentional: visible streaks, fast wins, and a social nudge to come back tomorrow. That habit loop: show up, succeed, see progress, turns an app into a daily ritual, building on its success in language education. Duolingo is now applying its gamification plus AI model to new subjects. Using the same simple formula: short daily lessons, the right level of challenge, and instant feedback. For math, music, and chess, Duolingo can launch new subjects fast. These new subjects already have real traction and should help the company earn more from each user over time, without needing big new marketing pushes. As of the second quarter of 2025, non-language business users made up 15% of the user base and are projected to contribute over 20% of revenue growth in the next 3 years. Part 3: The numbers, users, growth, margins, and cash. With these favorable conditions, Duolingo's performance in recent years has been phenomenal. From 2021 to 2025, the company's revenue grew from $250 million to $1 billion, a compound annual growth rate of 39%. Subscription revenue share of total revenue increased from 75% to 83.5%, showing an improving revenue structure. The gross margin also rose from 65% in 2021 to 72.4% in the second quarter of 2025, thanks to AI reducing content production costs and economies of scale. The adjusted EBITDA margin increased from 15% in 2021 to 31.2% in the second quarter of 2025, which is well above the edtech industry average of 18%. This proves their high margin plus low marginal cost profit model is working in the second quarter of 2025. The company reported revenue of $250 million, a 41% increase year over year. Adjusted EBITDA hit $78.7 million. With a 31.2% margin, free cash flow surged by 61% to $86.3 million, with a cash flow margin of 34.2%. User data was equally impressive. Daily active users were 47.7 million, up 40%. Paid subscribers were 10.9 million, up 37%. And subscription revenue was $210.7 million, a 46% increase, making up 83.5% of total revenue. What's even more impressive is that Duolingo is financially healthy despite this rapid growth. As of June 300, 2025, the company held $1.17 billion in liquid assets, had no long-term debt, and had $430 million in deferred revenue, providing stable revenue visibility for the future. This combination of high growth plus strong profitability plus stable cash flow is rare among AI software stocks and has made Duolingo a benchmark for institutional investors in the edtech sector. Part 4. Edge vs. imitation, the moat and the real risks. Duolingo's advantage isn't a single model checkpoint, it's the interlocking system. 1. Adaptive learning keeps each session in the productive struggle. Not too easy, not demoralizing, reducing churn and accelerating progress. 2. Generative content shortens course building cycles from months to weeks, from 6 months to 2 weeks, preventing the catalog from going stale. 3. Speech and evaluation deliver real-time grammar and pronunciation feedback, pushing practice closer to the feel of a human tutor, only it's available 24/7 and scales globally. With an 18% R&D investment ratio in 2025, Duolingo is continuing to build on its lead. This positive feedback loop of strong performance, high cash flow, heavy investment, and continuous customer acquisition has given Duolingo a significant advantage. Now the risks concisely, and in 2 buckets: a platform and commoditization risk. Foundation models keep getting cheaper and better. If big tech bakes good enough language practice natively into apps people already use, search, messaging, translation, the barrier to trying a bundled alternative drops. The danger isn't just losing users, it's losing differentiation if casual learners accept the default, be sentiment and execution risk. When expectations are high, strong can read as not enough, a quarter with slower mo growth. A pricing misstep or softer conversion can trigger multiple compression. Insider selling amplifies mood, even if the fundamentals don't change. After a multi-year run, the air is thin. Small disappointments can move the stock a lot. Part 5. Valuation, the drawdown, and what the market is really debating currently. Duolingo's market capitalization is about $12.5 billion. Its price-to-sales PS ratio is around 14x, which is a bit high compared to the industry average of 8.5x. Its market cap to adjusted EBITDA ratio is around 48x, also higher than the industry average of 25x. However, if we factor in growth using the PEG ratio, it's about 0.5x, which is significantly undervalued compared to the industry average of 1.76x. Compared horizontally, its valuation is higher than other edtech companies, but lower than top AI software companies like Adobe, which has an 18x PS ratio. Vertically, it has dropped from its initial PS of 30x when it went public in 2021 and is now at its historical average. Duolingo is a software application stock that has truly leveraged the power of AI. Its business model, performance, and user numbers have all benefited, leading to a spectacular 3-year run with a huge stock price increase. But now, the big question: Why has the stock recently dropped by almost 50% in one quarter? The answer reveals the double-edged nature of AI for the software industry as large generative AI models become more powerful. Tech giants could pose a huge competitive threat if they enter the market. For example, OpenAI's GPT-5 can quickly create language learning tools from simple prompts, which directly impacts Duolingo's core business. In August 2025, Google introduced new Gemini AI-powered features for its translation app, an upgraded real-time translation and a new practice feature. This new feature uses the advanced Gemini model to intelligently recognize pauses, accents, and intonations, allowing for true, fluid two-way conversations. These are the types of technological advancements that could fundamentally disrupt Duolingo's business. On top of that, the collective sell-off by Duolingo executives in May also shook market confidence. Part 6. Conclusion. Overall, Duolingo is a classic example of AI reshaping the education industry. Its gamification plus AI plus subscription model has not only driven user and revenue growth but also validated the commercial potential of edtech. It has excellent financial performance and a reasonable valuation, making it a rare combination of high growth plus high profitability. For investors, Duolingo's main appeal is its dual identity as both an AI software stock and an education leader. This allows it to benefit from both the valuation premium of AI technology and the anti-cyclical nature of the education sector. If it can maintain a balance between user growth and profitability, it has the potential to become a long-term winner in edtech. However, we must be vigilant about major AI tech updates and the threat from competitors like Google. If Duolingo's monthly active user growth slows down further, the market will likely scrutinize the company much more closely. If this helped, don't forget like, subscription, and comments.